Good morning, traders. It is Thursday, June the 6th. Taking a look at the charts. Let's start off with the market momentum, the bar chart info here. More or less, we saw panic, excuse me, panic selling hit the market again yesterday. We saw some carry through. Looking at the advancing versus declining shares, is about 9-to-1 ratio. When there's usually anything above 9 is usually a pretty significant intermediate low. I consider anything over a 3-to-1 ratio to be short-term panic. Usually you see a bounce or a pause the next day, but when you get to 9 plus sellers, which is what we had yesterday, meaning for every 9 shares sold there was only 1 bought, so everybody's running for the door. There's a lot of panic in the market, and that led to a free fall and continued grind all the way down all session yesterday. That's usually means we're getting very close to a significant intermediate low, meaning we get a multi-week bounce slash rally. So let's just take a look at the overall momentum, zooming in on the kind of shorter term stuff. Here's the bar chart momentum index. Again, anything over 101 is short term overbought. We usually see a pause or pullback the next day. Anything below the 99, we usually see a pause or bounce the next day. And yesterday we closed down into this oversold conditions, telling us that most stocks moved too far, too fast yesterday to the downside, and there's likely going to be some value buyers, people picking up shares down at these levels. So this morning in pre-market trading, I think we're seeing the market bounce up a little bit, but overall it's regular trading hours that really counts. That's where the majority of the volume is traded and the big money gets flowing. So we'll see how things play out today, but overall with the panic selling yesterday, with the chart above I just showed you at the 9-to-1 ratio, that can lead to some continued weakness where you see intraday volatility extremely volatile, making possibly new lows, sharp new lows, and then sharp reversal back to the upside. Now taking a look at stocks trading over the 20-day moving average, we're getting to some pretty key exciting times on this chart. Anything over the 75, you've got to be aware for an intermediate market to be topping for a multi-week pullback. You can see when it touches this level, you get a 1 week plus pullback, gapped up in that level. You see a multi-week pullback, back up, multi-week pullback, back up, multi-week pullback, which is what we're seeing now. Anything down down near this 25 area, which we don't have any previous bars down here, so it's kind of condensed, but more or less this 25 area, if the chart shows the full range of 100%, it'd be more like down like this. Anyways, we're coming down into this level. We came down, had a bounce, nice 3-wave correction coming down. We've blown right through this 50%. So 50% of stocks, they did come down. 50% of the stock market came down, touched the 20-day, and we got a nice bounce off it, but that's all we got. We pierced through it. Now we're in free fall mode, panic selling. And now we're coming down into this lower reversal zone, which you can see when you get down into this area, you start to get these, you get to get some key bottoms. So we're starting to get down to this level. If we do see more selling today, we'll probably see it come right down to this lower reversal zone and probably get a pretty significant bounce in the equities market. Taking a look at stocks over the 50-day moving average, this is coming down to a pretty key support zone. We're almost down to the 50% level, which is a pretty key pivot zone. We've had that 3-wave kind of correction here, and this means that this is a bigger, slower moving chart, and more or less when this comes down to the 50 level, that'll probably coincide with the chart above I just showed you at the 20-day. That will be bottoming while the 50% of the stock market will be coming down, tagging the 50-day. And the 50-day moving average is a pretty significant moving average. A lot of people follow it. Institutions like to buy on it. Individual traders like to buy on it. So when we do get down to that level, there's going to be, you got to think that almost half the stocks are going to be tagging their 50-day, and a lot of people will be jumping in for at least a bounce off that price. So we're getting close to likely a fairly strong bounce in the equities market. Taking a look at the charts this morning, let's just go and take a look at the US dollar index. You can see we've been chopping around the middle of this range, kind of a messy chart, not really helping with direction in 2013. Looking at this chart here, you can see we've got overall we had bullish price action and bull flags, and then it started to get into a toppy pattern, and now we've gone into down mode. Yesterday, this week really we've been looking at price come down. It's been forming this bear flag, and I pointed out it looks as though it needs another flush down to really kind of finish this pattern and come right down into a key support zone. And we've come down to that level this morning. And in my opinion, I think we're going to see the US dollar start to put in a bottom here. We might see it drift down a little bit more into a support zone, but overall I think we're going to see it find support. It's at a multi-wave, 1 2 3 4 5, and it's going to falling down into support. And if we get a strong bounce in the dollar, the way that it's been moving is money should move into the dollar and US equities at the same time, and we'll see a bottom put in. But we're kind of just going to see if that plays out going forward. Again, it hasn't been working for a very good indicator this year. Taking a look at precious metals, here's the gold chart. Gold chart's been kind of floundering, trading sideways. It's trying to hold up here. It's trying to form a bottom. If we do see the equities market have a strong bounce here, I think we're going to see gold break to the downside. I think a lot of people are very nervous about the stock market topping, and that's holding gold and silver prices up, along with gold miners. But if we do see the market put in a strong bounce here, then I think we're going to see people pile back into the equities market and ditch their gold mining stocks. We're going to see a sharp move back down to test these previous lows, possibly even pierce them, and see it drop all the way down to the 13 level, somewhere down in here. Looking at silver, pretty much the same kind of scenario. I do feel as though silver has made more of a bottom. I'm going to be posting a report on precious metals this morning with more detail and kind of a big picture using weekly analysis that kind of shows where we stand in the grand scheme of things and how we're still potentially and most likely weeks away from a real bottom actually starting to form and be triggered before there's significant upside potential following quickly after. But overall, silver's been trading in this tight range, and we could see it come back down, test this 21 where these previous candles kind of the main bodies are. I don't think we'll make new lows in silver, but we'll have to see how things play out and if the equities market actually can grab some stability and rip to the upside here. Looking at gold miners, gold, silver miners are pretty much all in the same boat. Let me just zoom in a little bit. More or less, it's trying to hold up. It's trying to form a base. It looks as though it's trying to form a mini bull flag. We are coming into resistance on many levels. We've got just these previous highs going to act as resistance. We've got this down trend line going to act as resistance. You got to remember, we've been in this pattern before. We see price move down and then it fluctuates sideways. Looks like a mini cup and handle ready to pop, but it gives way. Does the same thing. You form this little mini cup and handle and it gives way. Same thing here again. Trade sideways, falls away. We're back down more or less at that pattern here, forming another handle. We're at resistance, and the trend is still down. So not looking, if we do get a strong pop, then we could be looking to get long on a bullish formation, but there needs to be volume behind it also, which I think there will be if we do get a strong pop. But again, we got to play it by ear. Trend is still down. This pattern has been, while it looks bullish, the fact that we're in a downtrend puts the odds still to lower prices. And you can see how this pattern has played out over and over again. It's kind of starting to grow, and that means we're getting closer and closer to a bottom, but we have yet to see a reversal in the selling and see a big wave of buying. Taking a look at bonds real quick. Here the bonds are trying to hold up. More or less, they are still in a downtrend. Just looking at this price action, we had this breakdown right here. We're clearly stuck underneath this sharp breakdown, forming a little bit of a kind of a pennant or bearish flag here that still points to a potential another sharp drop to the downside. Again, if we see if this does break down, which is still what it's pointing to, that means equities are going to be putting in a bounce here, and we're going to see money flow back out of bonds and pile into the equities market like the SP 500. We'll see the broad market continue to move higher. Now taking a look at crude oil just real quick here. Crude oil, not a fan of the chart. It's been chopping around, very volatile. Having a little bit of a move up again this morning, but overall not a fan of kind of what's unfolding. Gonna just let this thing, let's just go to the weekly chart, give you a good feel of where we stand. It's a fairly big pattern that's been playing out. You can see we're narrowing into this wedge here. Price is ping-ponging around, and eventually there's going to be again, this is a weekly chart. Eventually there's going to be some type of breakout, and on the weekly chart could be a great longer term breakout using a longer term position in the weekly chart, because once you get a breakout in the weekly, you usually get a 3, 4, 5, 6 week run in price, and we could see a huge move to the upside up to the 110 area, or we could see a sharp move to the downside down to the 80, possibly even 75 area. But until then, we're ping-ponging around in this narrowing range. As you get closer to the apex, things become more unpredictable, and you really don't want to get too involved with it until you see a clean break. Jumping to the SP 500, let's just take a look at the signal chart. Yesterday I pointed out if we have a few more down days, the actual technicals are going to flip to bearish. And you can see when you get these orange candles here we've seen on these pullback, that means the market is getting close to technically flipping to the downside. It's kind of like an early warning. And zooming in, you can see yesterday we actually have the technicals slowly starting to roll over, and that we could be starting a downtrend soon. We technically still have, depending on the size of the drop, we still have another I think 2 or 3 days to the downside before we actually see things give way. Looking at this, we've got this gap window, which is a pretty critical level. It could fill, and I hope it doesn't, but we'll see how that goes. Overall, we could see a spike down today or tomorrow, filling that this window and then ripping to the upside, and that would really shake a lot of people out. It might actually even trigger our stop, depending. I'd have to look to see where the stop is on that, but overall the trend still continues to hold up. And if we do fill this window, then we're probably going to get extremely, we'll fall deeper into an oversold condition, and will be that much more to have a bounce. Now, it doesn't mean we're going to make new highs. It means we could easily rip to the upside, hit resistance, and then finally reverse and start a sharp downtrend. And again, if we do break down to this level and it's a slow recovery back up, or takes several candles, this trend could easily flip to the downside, and we might actually have a shorting opportunity on this bounce and to play, and we'd be playing the downside. So we'll have to see what the technicals, the volume cycles are doing. Overall, things are starting to get a little long in the teeth to the downside. When you get long in when you technicals start to roll over, you start to get fear, extreme fear in the market, just like back on these other days, and that's when people are starting to really panic out of the market, because they're starting to see that the trend is, rolling over. And a lot of times that is the the dead bottom of the trend, or sorry, of the pullback, and you get a huge move to the upside, just like what we've seen in these previous candles. So this slow rollover of technicals has got a lot of people spooking out yesterday. Could have some carryover today, maybe even tomorrow, but overall we're still in an uptrend, and the lower it goes here, the lower the risk is to get in. Simply because once the technicals do change and the candles go red, we simply exit our position and we wait for a bounce to take a short position as the trend down hopefully continues. Now, taking a look at the SP 500 futures, here's the 10-minute intraday 24-hour chart, and you can see here we've had move down, pause, another move down. Yesterday we got that continued move to the downside. We got this gap window here. You can see these volume spikes, price by volume, and this is where the gap window happened on the SPY ETF. So this is all a gap window. Let's just draw that in real quick. We came down to that gap window yesterday. We found support. We're starting to bounce a bit this morning back up, and if we do fall into that window and break through it, likely going to see it fill that void and really see price panic out and find support. You can see how thick this volume range is. These blue price by volume bars, there's a lot of support down there. So if it does go down, it'll probably spike into that area, and then we see some type of sharp price action and bounce to the upside, which would have a lot of upside potential in a short period of time. Overall, we are at the top of the window, starting to bounce this morning. Market's trading up a bit, and we're just going to watch how things unfold. Again, we've got resistance. The next resistance is right across here, this high volume level, which coincides with this consolidation and obviously these spike lows and this breakdown level. So we could see it pop back up, and things could still be choppy here for a few days, which is what I mentioned earlier this week. When you get into these oversold conditions, the market becomes extremely choppy for sometimes several weeks, but eventually it stabilizes and you see a continued move up. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.